Well, folks, what an absolute disaster of a day in the stock market here today. The indexes are not telling the full story. That's what I'll say about that. We have an interesting phenomenon going on in the market right now where a few of the biggest stocks are kind of holding up these indexes and making things look better than they really are. Let's just put it that way. And I'm going to take you through what's going on here in the market. Some really shady stuff going on in the market. I mean, it looks to me like they're trying to ruin the banking system as we're kind of ticking along here, and they're trying to consolidate power into the few of the biggest banks. Based upon the price action I saw today, I'm just like, at some point in time, it becomes a little obvious, right? And some massive moves down some stocks that I want to share with you. I mean, just crazy moves. I'm talking 20%. I'm talking 50% moves down today in some of these stocks. Absolutely insane. So yeah, I just wanted to react to kind of this with you guys here on the reaction channel here today. Thank you everybody subscribe to the channel. I appreciate y'all. I hope you enjoy the content. And Icahn Enterprises, this was the first one that caught my attention. The reason being is Carl Icahn is one of the most famous people in the stock market. One of the most famous, like not to a Warren Buffett level, but that next tier down. Super famous. If you've been in the stock market, you'd heard of Carl Icahn, okay? So he leads this company named Icahn Enterprises. Stock's down 20% today. Now, it's a little bit of a fishy stock because you look at their earnings per share and then you look what they've been paying out for dividends, and things don't quite add up. Now, what happened here today is Hindenburg Research came out with a big piece on Icahn Enterprises, okay, which is obviously led by Carl Icahn, the corporate raider throwing stones from his own glass house. Oh my gosh. Now, I'm not going to take you guys through all this. If you want to pause the video and read through all this Hindenburg Research stuff, then go ahead, pause the video and go through this, okay? This isn't it, by the way. We got another full page of stuff they go into here. I mean, it's absolutely amazing. And this isn't it. We got more here, okay? So if you want to look at all that in depth and detail, I'm not going to take everybody through that. It's going to take 20 minutes to go through all this, or 10, 20 minutes to explain all this and go through all this. But it's fascinating, absolutely fascinating to see them absolutely come out and just cause that stock to go down 20% like that. Like Hindenburg Research has big pull. But my thing is, like, I feel like people have been sleeping that own this stock. And it's interesting. Carl Icahn, if you didn't know, like he was portrayed as a character, Gordon Gekko. He was one of a few people that was portrayed in the movie Wall Street, which in my opinion is one of the greatest movies ever in history, not just stock market, just movies, period. And he was one of about 3 characters that Gordon Gekko portrayed in that movie in 1987, being this corporate raider, right? But there's something silly going on here with this company, okay? And I don't think it takes Hindenburg Research to come out. This doesn't make any financial sense, okay? One is this company is expected to, I guess, have their revenues plummet in a pretty epic way here, okay? In a pretty epic way. The other thing is, this company's going to pay, well, I don't know what they're going to pay out in the future. We'll see what they pay out, but they paid out like $8 in the past, and you just run the numbers, and it's not quite there for this Icahn Enterprises. So a lot of strange stuff. I don't know what people even own this stock for, because the math isn't quite adding up, and it seems like I don't want to say a fishy ordeal, but it seems like a very high risk stock. It says it has a 15% plus dividend yield. That's going to be very attractive to a lot of folks, but then things aren't all they're cracked up to be there. Okay, check this out. Chegg stock is down almost 50% here today. Now, I took this screenshot with about an hour left in trading. 43 million shares have traded hands. The average volume is 3 million for Chegg. So this means just about everybody sold this dang stock today. Absolutely incredible to see that sort of selling pressure on a stock in one day. 50%, okay? So what happened here? Well, ChatGPT, I guess that's not going to be helpful to everybody, okay? The education company warned increasingly more students are turning to OpenAI's ChatGPT to help with their homework, hurting new customer growth rates in March, okay? So basically, a lot of the college kids that are mainly what are Chegg's customers, right, are essentially using ChatGPT rather than different products that Chegg had before. And so this is an interesting dynamic here, because it seems like obviously Chegg's being disrupted in a pretty epic way by ChatGPT. And the other thing you got to think is this might just be the beginning of this kind of disruption here, right? And Chegg is a service I even used when I was in college in like 2008, 2009, 2010. And the reason being is at that time it was awesome because you could basically, buy like used books and whatnot, right? Or, just basically kind of like rent books and stuff like that from what I remember. And they were one of I think they were one of maybe two services that you could do that back then, if I recall. And I'll tell you, I'll let you guys in on a little something, okay? And make sure you tell your kids this and tell your nieces, nephews, whatever, okay? Because they might go to college someday. The book industry is, let's just call it, very sketchy, okay? So accounting teacher actually made me aware of this when I was in college. And he basically kind of exposed what would happen for these colleges in regards to what they would do in the book industry. And what he explained was they would have these big, and I don't know if this still goes on today, but it certainly did back when I was in college, okay? But, these book companies, which there's a few major book companies that kind of dominate the market for college textbooks and whatnot, they would have these huge vacation retreats and pay for all the expenses for these different professors of colleges and whatnot, and universities, to come and stay for free and have this great, 2, 3, 4 day vacation essentially, right? And then those people would have their students buy the newest books. And the new books would be $150, $200 many times, right? Anywhere between $100 and $200 versus almost the same exact material in the previous version you could get for probably under $50. And many of those used books you could get for $20, $30, some even $10 or $15. But obviously the book industry doesn't want everybody using the same books over and over again. That's not good for them. They want people using the newest editions. And when you would actually look at the older edition books versus a new edition, you'd find very little of the curriculums actually changed. It's almost all the same stuff that you're learning. So it was fascinating, and that was something that definitely got my eyes open in regards to that. So, I don't know, any company that kind of came in the 2000s and helped with, facilitating people being able to get books in cheaper ways and whatnot. I was always a fan of those sorts of companies because of that whole situation, okay? Now, we got bank runs. There's going to be a lot more bank runs, okay, folks? And I mean, like, a lot more bank runs. A lot more bank runs, okay? So, we might just be at the tip of the iceberg. Jamie Dimon basically made it sound like, this part of the crisis is over and whatnot. Based upon stock prices here, folks, I don't know about this. PacWest today, PacWest Bancorp, is down 26, 27%. I mean, this is a company that looks like it's got another bank run situation going on. And with PacWest, the stock price keeps going down. Next thing you know, they're going to be insolvent. Next thing you know, all of a sudden, they're going to be in FDIC. And then who's going to come in and scoop in? Maybe a JP Morgan, maybe one of the other big banks out there. Western Alliance Bancorp down another almost 15% today. 15%? I mean, this stock was $86. In the past 52 weeks, now it's 31. 31, like, where's all the selling pressure coming from? Zions Bancorp is down another 11% here today. Like, what is this, another bank run situation there? Fifth Third Bank, this is actually a pretty big one. I was surprised to see this one. Down another 5% plus here today. This looks like some fishy stuff going on, folks. I mean, very, very fishy. To see these stocks just continue to tank and tank and tank and tank. And the more these stocks tank, the more it creates a bank run dynamic. So it almost becomes like a self-fulfilling prophecy. Huntington Bank shares down another 6% here today. 6%? 6%. Key Corp down another almost 9% here today. This stock was $20. It's under $10 now at this point in time, right? In a matter of a few months. Regions Financial Corporation, another big dog, down almost 7% here today. Oh man, this smells like, I hate to be a conspiracy theorist here, okay? But this smells like a situation where it seems like they're trying to ruin all these smaller banks. And especially a lot of these public ones, and consolidate power into the few of the biggest big dogs. And, I don't know if it's going to be, if you think about, like, most industries, right? Most industries are kind of ran by 2 or 3 companies. And, I understand that we're not supposed to have a monopoly in the United States of America, but when you really look at our options, you really view it in terms of, like, this is kind of a monopoly, right? You think about big box stores, you really have 2 options. You have Walmart and you have Target, right? You think about, let's say, e-commerce companies. I mean, you really have, like, Amazon, and then I guess you have Shopify. you go through the different industries, but banks, I mean, there's thousands and thousands of banks. So it's one of the few industries that hasn't really been disrupted into just a few players. You think about telecom industry, right? You think about going to get phone service. I mean, I guess there's a few companies trying to emerge in that space, but really it's like AT&T, Verizon, T-Mobile. Like those are really like your three options if you're going to get cell phone service, right? And so I don't know, man. The way I'm looking at this more, it seems like they're trying to consolidate power into a few of the biggest banks for whatever reason. Maybe it's just natural that this is happening, but these stocks shouldn't be falling like this. They're in complete free fall, and they just get more and more selling pressure going on. And you looked at that JP Morgan deal. I mean, as somebody that's a shareholder of JP Morgan, I got to say this, okay? That deal was the most sugar-coated deal. I almost felt wrong for being a JP Morgan shareholder, seeing the sweetheart deal they just got on that acquisition of First Republic there. I mean, it was shocking, folks. Absolutely shocking. I mean, they got that bank given to them, basically. I have never seen anything like that in terms of that, just like, here you go. Like, it's unbelievable news for folks like myself that own JP Morgan stock, but I'm just telling you, like, it's fishy, man. It's absolutely ridiculous. I mean, it's insane, okay? So, nonetheless, folks, we got shady stuff going on in the banking system, and it looks like they just want to consolidate into a few of the big dogs, okay? Commodities down big here today. Look at UCO, down almost 10%. Ooh, okay. That's oil related. WTI, West Texas Intermediate, down over 5% here today. Natural gas down 3.6%. The commodity index in general, GSG, which once again, if you don't want to track all these different commodities, you can always just add GSG to your watch list to let you know kind of what's going on there. GSG down over 3%. Copper down, soybeans down, wheat down, corn down, oats down. Lumber was up slightly and coffee was up slightly. Those are commodities I personally care about. So this goes to show you that, when you get any real weakness in the market, commodities go down. But the good news is with that, commodities go down, and guess what happens? It's likely inflation is going to go down, because at the end of the day, all these commodities can help out bring inflation down. If they're going down, if they're going up, it obviously works the other way, right? So in a day like today, you get good news and you get bad news in there, right? Look at the oil and gas stocks here today. I mean, my gosh, look at the moves down. BP down almost 8% here today for BP. Apache, well, I don't know if they still call it Apache or not. I think they call it something else now. Apache's, I think, the old name from back in the day. Down almost 7% here today. EOG down 5.6%. Marathon, Devon, Chevron. I mean, look at the moves down. And these stocks have already been kind of getting hit a bit. Good news for Chevron is, when their stock price goes down like this, do keep in mind Chevron has a ridiculous buyback on. I believe it is a $75 billion buyback. And I know that's a hard number to even fathom. But I believe Chevron has a $75 billion buyback on right now. And so do keep in mind, when their shares go down, it actually benefits them, because that means they're going to be able to buy a whole lot more shares for a whole lot cheaper in regards to Chevron in that situation, okay? Now, this is interesting because you see a day like today, and you have this happen, okay? Lawmakers led by Democrats urge the Fed to halt rate hikes ahead of Wednesday's announcement. A group of lawmakers, including Senator Elizabeth Warren and Representative somebody, urged the Fed to halt its rate hikes. The request came the day before the Fed is expected to raise the benchmark by another quarter point, which I don't think they should do, but I'm not the leader of the Fed, so it is what it is. The lawmakers pressed federal Fed Chair Jerome Powell to avoid engineering a recession that destroys jobs and crushes small businesses, right? And this isn't the end of this, folks. You got to understand this, okay? We've got an interesting situation here where, inflation's been high, but the bigger fear from a lot of folks, at least on the Democrat side, is we're going to end up having a major recession or a recession of some kind going into the presidential election. If that happens, then likely, I can tell you, it's almost a for sure thing, whoever's the Republican candidate will win, right? And as of right now, it's looking like T-Man could be that guy, okay? DeSantis was doing well, but, and it's going to be a long cycle. So it's likely going to be either T-Man or DeSantis. But the more it looks like it could be T-Man. And Democrats do not want T-Man back in the office. That's something we know for dang sure. And so if we have a recession going in that, it's almost guaranteed Biden's out. Biden's poll numbers aren't that great as it is. Never mind if you engineer a recession, job losses, let's say at the end of this year going into 2024, you're gone for sure at that point in time. You stand no chance, 0% chance. And so we got an interesting dynamic where the politicians are really going to try to put the pressure on the Fed to reverse course this summer. This has always been my conspiracy theory. It remains my conspiracy theory that there's going to be a major sell-off potentially at some point this summer. And maybe this is a start of it. I don't know. Okay. And in that sell-off, they'll cause so much more problems, a lot more banks going under, a lot more bank runs, and a lot more fear in the markets in general, and force Jay Powell to then start cutting rates. And hopefully engineering the soft landing at that point in time. And if inflation's at the threes at that time, then that's not a big issue anymore. So that's kind of my thought process there. We'll see how it all shakes out, but this is going to get political, folks. And you do have to understand this. This will get political because we're going into political season. And I'm telling you, they don't want to see all of a sudden at the back half of this year, jobs being lost, recession fears, market tanking, more bank runs. It's going to look like, people don't really point at the Fed. They're going to point at the politicians. The politicians are then going to try to point at the Fed, but the average person, they're not at a level of understanding of the economic system to even understand kind of what's going on at the Fed. They just understand rates are going up. And so, unless you're super into finance, you're not going to get that. So you're just going to look at the politicians in office and say, this guy's in office, this guy's in office. They're doing obviously a horrible job because look at now jobs are being lost. This is happening. Small business going under. My favorite restaurant just went under, whatever. Okay. So that's just something to kind of keep in mind there, folks. I appreciate everybody joining me as always. Thanks for being here on the Reaction Channel. 26,300 plus subscribers strong. Now at this point in time, if you'd like to access my Becoming Master of Stock Market course, or you want to apply for my private stock group and the private wealth group and level up your investing game, check out the pinned comment down there. That will be to the link. Okay. Much love as always. I appreciate y'all and have a great day.